This is the 10-Minute Contrarian Podcast. This is VP. We are a solutions-based podcast, diving into the world of contrarian investing and alternative finance. You can find us hosted on the No Nonsense Forex YouTube channel, NoNonsenseForex.com, and podcast players everywhere. Episode 166 is brought to us by Bybit. If we are, in fact, in a risk-on environment, you are going to want to take advantage of this at every turn. That means trading, not just investing, and especially crypto, because you can trade and make crypto as it's going up. Why would you not do this? And why would you not trade on a highly capitalized platform? And why would you also not trade on a platform that gives you nothing but free promotions, rewards, airdrops, all that stuff? But you have to click on my link to do that. The way you do this is to go down to the show notes and click on the link to the Bybit blog, which gives you all the relevant, up-to-date information you need. My affiliate link is at the bottom of that blog, and you can click that and get yourself started. And the sooner the better, because with Bybit membership has its rewards. It is the 10-Minute Contrarian Podcast, and if anybody cares, this should be the last episode with the potato mic. I am coming off of vacation after this and heading home. As far as where I went, if anybody cares, I'll share a picture on X this week and so you can see it. I think a handful of you will find it quite interesting, but let's move on from there because we got some news yesterday, and I tweeted it out and asked you guys what you thought about it because Powell pretty much stated the obvious at the Jackson Hole Symposium in Wyoming. Now, I used to always say back in the day that Davos and Jackson Hole were complete nothing burgers. It was just a big financial media circle jerk, and it really was for the longest time. But ever since the Federal Reserve started taking over the entire economy, these things have taken on a bit more meaning. And Powell's speech at Jackson Hole really solidified for a lot of people that we are about to have rate cuts, finally, in the United States, taking pretty much all of the mystery out of it now. And we can reasonably assume if he's going to come out and declare it like that, that he's not going to go back on it and start raising rates or delay any longer. So what does this do? Well, this pretty much does what it always has done in the past, at least in the short to midterm, and that is dollar goes down, obviously, because their interest rates go down, which means everything else is going to go up. Now, we know from the Fed Reserve chart of interest rates going up and down that this heightening of rates and then the flattening, which we've been pretty much a part of all throughout 2024, and then the final drop in rates is a precursor to every recession we have had since the early 1980s. But we also know that doesn't happen right away. And we also know, too, that markets and really Wall Street, they don't really care. They have money to make right now, especially if we're gearing up for a recession. You got to get it in where you can. So they're going to do that. And that's going to mean every risk on asset, so the entire stock market and crypto market, is likely going to go up during this time. And this is something we have not only been waiting for, this is something we've been pretty much ready for. We're not completely in defense mode. There is still a time to play offense. We predicted this. And we said as long as there is an election this year, and there is, they are going to juice the markets. So that's markets up, crypto up, dollar down, oil down, especially because the opposition has pretty much come out and said, yeah, if we're elected, we are getting rid of every last one of you. So that's not going to bode well for them if this happens. So they're going to still do everything they can to try and make Americans happy enough to vote for the incumbent. The reason my predictions, at least on this show, have come true more often than they have not is because I simply go by human interest. That's all you have to do. There's no magic to it. But whether I am right or if I'm wrong, as far as offense goes, we pretty much need to get it in where we can. I remember listening to Raoul Powell, and he has a longer term view on this. He says by 2030, things are really going to start to get ugly because that's when, like we've talked about, the population decline really starts to taking effect in a lot of countries. He thinks AI is going to take away a lot of people's jobs over the next 5-10 years. And so he has a very long-term, get it in while you can outlook. But in the shorter term, we don't know exactly when this recession is going to take place. I have some ideas. but I'm saving that for the politics episode, which should be coming up next month, I would imagine. So, in terms of how much time do we actually have, I just don't know. It would all depend on when they decide to pull the release valve. And I think depending on who gets elected, they're going to pull the release valve at different times. And the response to when this happens, I also think is going to be quite different depending on who's in power. Now, don't get me wrong, I would like to see as much time go by as possible for us to get it in. I would like to see a lot of my mining stocks get to take profit levels so I can do that. I would like to see the Web3 boom, fully take shape, at least give us a cycle there. And then for my own selfish reasons, if you want to go ahead and crash things after that's taken place, go right ahead. But not financial advice. I do think bullishness is on the horizon. I think the markets have been waiting for this. We're just coming out of summer, so it makes sense for people to get back on the horse. Now, as far as the crypto markets go, this whole announcement set Bitcoin up about 5%. And also in the crypto markets this week, USDT and USDC had minted a lot of stable coins. And you can rest assured that a good portion of those stable coins are going to get redistributed back into the market. And as far as other tokens we hold, Grayscale has come out with their Avalanche Trust. Now, I don't know if this is news or not. You have to remember back in the day, they had a Litecoin trust, they had a Mana Trust, a Decentraland token. It doesn't always mean something, but it is still positive. It's not negative. You are giving investors a gateway into something, even though it's via a mutual fund. But when this was announced, it did send the Avalanche price higher. And like I said, we like these bricks in the wall. We like when we keep building, when we keep adding opportunity. The real final piece of the puzzle here, in my opinion, is just for these things to actually start getting used. That would be the one real counter argument to crypto is there are very few things, minus stable coins, that people actually use on a day-to-day basis. Now, of course, I think this is all changing. I think pretty soon you're going to see a lot of tech out there. When you see a commercial, for example, it's going to say powered by Ethereum or powered by Avalanche or powered by Near Protocol, whatever the case is. I think that era is certainly coming. And even though it's very speculative because we're getting in super early, we don't know who the winners are going to be yet, it still makes sense to take the information we have and try to pick winners there based on what we know. But I would say before you do this, I would strongly advise that you have your defense in order first, because we could be wrong about all this. And if I had to choose, I would say defense is more important than offense, because without defense, it doesn't matter how much offense you have. You're just simply going to lose it eventually. So, to answer this question for yourself, I would say go back to the episodes I did on financial prepping checklists 1 and 2. I'll abbreviate it for you. As far as defense goes, I would say to make sure that you have an adequate amount, relative to what you have invested overall in gold, in Bitcoin, and in cash. Bonus points for USD, double bonus points if you can have physical cash on you as well. Now, you might not think Bitcoin is a defensive asset as much as it is an offensive asset, but I always go back to when Silicon Valley Bank and Signature Bank crashed and Bitcoin went up. That told me a lot because in a recession, there should be a credit crisis. And if there's a credit crisis, there's going to be a bank crisis too. And you really want protection there. So on that note, you still need a bank account and bonus points if you have more than one. And double bonus points again if that other bank account is in a different jurisdiction altogether. My number one priority before I would start playing offense is to make sure I had this set up already locked down. Then I would really start working towards spending less money, however you plan on doing that, and getting your passives up so when you do spend money, you're actually getting paid for that. This is not something I would want to scramble to do at the last minute. I would really work hard to get this set up going now, because not only is it going to pay major dividends for you immediately but you're going to be really glad you started living this lifestyle when things finally do crash. And if you have a family, slowly easing them into this lifestyle is really going to be a superior choice as opposed to having just to cut corners everywhere you can once things finally really start to go downhill. Just do it now so people can get used to it and you can start stockpiling extra money immediately. This is the defensive playbook I would strongly advise people utilize before turning over into more offense. But as we spoke about in this episode, it is probably time to crank up the offense because this might be the last real melt up before things get bad. We don't know, but we do know we had some very positive news this past week, and markets reacted accordingly as they should, and we are getting ready for a rate cutting cycle. So we have to prepare for this, and we need to take advantage of this as much as we can because historically we know what happens soon after. Like it or don't like it, it doesn't matter. We have to play with the chess pieces that are on the board and where they have moved. And the chess pieces have moved a little bit over this past week, and this is how I am choosing to play it. And even though a lot of these moves seem obvious, just remember your average person is either sitting there and just lottie-dying in their 60-40 portfolio, which they're going to live and die upon, or your average person is just not even investing anything at all. So we are elite company here, and I think we're really going to make it out the other side when that time comes, because we are certainly not crazy. We are just early.